Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarley. Great to have your company with us as we look to the market resetting, or at least touching intraday some of those record highs. You can see there the CBOE 200 up by 0.8% as we close out the day's trade, and the ASX 200 is up by about 0.8%. 87.42 is where we sit, so not far off the all-time highs reached, and certainly a lot of positive momentum coming through into this market, and a lot of it really to do with what we heard as the market opened up in terms of a truce coming through from Japan and the US in terms of what sort of tariffs are really going to be imposed there. Locally, it was the major miners continuing this multi-day rally. The banks also looking to snap this losing streak that they have been on. But Trump saying that the deal with Japan has been reached, a tariff set at 15%, so not as hefty as the 25% that had been anticipated. Japan will accept cars and trucks built to US motor vehicle safety standards, and in return will provide a $550 billion fund to invest in projects in America. Now, this positivity has spread through into the Japanese automakers, the likes of Toyota up by as much as 11%, Honda, Nissan also rising, and it's flowed through to South Korea as well. You've been seeing a big spike in the likes of Hyundai, so really just giving that positive momentum across Asia. On the same front though, when we're talking about Japan, we have heard that the Prime Minister Ishiba could declare resignation as early as next month. And I liked this as well. Online overload, offline uncertainty. This is from Australia Post. So we know that we have these cost of living pressures, but Aussies, and I can say that I'm one of these as well, splurging more online than in retail stores. So of course we've got this speculation that interest rates are going to be cut. It seems to be somehow filtering through to us when we're on our phones or computers looking for some deals, and shoppers spent more than $19 billion online from the start of April to the end of June, up 15% compared to the same period last year, according to Australia Post quarterly e-commerce report. Almost 8 million Aussie households making a purchase over the web in the quarter, which was capped by those end of financial year sales, and certainly outperforming what we're seeing in the bricks and mortar sellers. Let's get back to the equity market though and have a look at how those miners did, with iron ore just retreating from those 5-month highs set yesterday, but still a lot of positivity in that market. Rio up more than 1%, Fortescue up by 2.1% to $18.16. The banks, as I mentioned, also having a comeback, particularly CommBank, which looked like it could have entered correction territory. It was down about 9.5% from its record high. Energy stocks also in focus, particularly Woodside beating expectations with its second quarter revenue. It did though trim its 2025 outlook. Karoon is there, up by 1.3%. We heard that CEO Julian Fowles will leave the company next year. Ampol also out with an update today, expecting lower half-year earnings though due to supply chain impacts, but shares up by almost 4%. And Paladin out with an update, sending its share price down by 11%. In terms of some of the other company news we followed, Telix Pharmaceuticals, and I'm going to ask my guest about this in a moment. We were talking about it off air. Look, it's still very below what brokers are looking for in terms of the outlook for this stock. But shares were really heavily sold off today after the biopharma company confirmed that the SEC has formally requested it provide certain documents and information relating to the development of its prostate cancer therapeutic candidates. Telix, though, did report a 63% jump in second quarter group revenue to $204 million and reaffirmed its guidance. So has it been unfairly sold off? Meanwhile, Iluka advancing after it achieved full-year production guidance for zircon by June 30, also telling investors that ongoing trade policy uncertainty has made it harder to issue further guidance. We talked about Paladin diving, telling investors it expects to produce between 4 and 4.4 million pounds of uranium oxide at its Langer Heinrich Mine. Now that's actually ahead of full operations planned for next financial year. And IAG up by 3.4% after UBS upgraded the stock to buy, citing improved earnings resilience and upside risks. And PointsBet there is flat, but it has rejected again, or told shareholders to reject that what it calls unsolicited scrip offer from Better and accept the bid from rival Japanese firm Mixi. All right, let's get to our guests now, and welcome to the COB, Mark Gardner from MPC Markets. Good to see you.
Good afternoon.
So we were talking off air about Telix. Just tell our viewers, podcast listeners, what you were telling me, because it does seem like it's been potentially hit hard unfairly.
Yeah, it's been hit really hard, and it doesn't seem to be. It's perhaps the fact that Australian investors don't understand, but those SEC inquiries are more around checking their processes for FDA applications and approvals, etc. And they're fairly routine, and they have been for all biotechs and drug companies in the US. And there's been a lot more of them being done since Trump's come in, and there's been a lot of focus because he's trying to bully pharma at the moment. So it's not really out of the, it's not like a criminal investigation or anything like that. So, and they did make, they were already trading at a little bit of a discount. The results were in line with their guidance, which I think the market was expecting that they were going to deliver lower than the guidance. So at the moment, I think it's probably fairly cheap, to be honest. So yeah, we've been topping up today. It's one of those ones we've had since sort of $7, $8. We've been in and out a few times. So we had a half allocation on. We're topping up again today, and from a long-term growth perspective, we like what they're doing. They're vertically integrating in terms of their manufacturing facilities, etc. As well. So. Yeah, long-term prospects for the company. I think those upside price targets are more than justified.
Yeah, I think Jeffrey's had $34 and it's at $21.70, so it's still
nearly everyone's $34 to $36. So, and that was an AFR article. So yeah, I think you probably buy into the panic. There's usually not a huge rush, but for us, realistically, we trimmed out of half leading into. In March, and we've been looking to buy back, and this seemed like a really good opportunity for us. So, because we're looking at holding it on a 3 to 5 year basis. So, and I think it'll continue to do very well. They've got other drugs in the pipeline. None of the SEC thing is remotely to do with their revenue generating drug that. That's pulling in, those 63% year-on-year gains in revenue. So yeah, I think it's probably just a bit of an overreaction.
All right, an overreaction perhaps. Now, I know that you at MPC Markets are not necessarily in the banks, but can you just talk us through what we've seen in terms of, it doesn't look like the market wants to push CBA to correction territory.
No, overall, and I mean, you'd be very brave to be shorting realistically. And it does demand a premium. I'm a lot happier with the broader rally today. There's obviously, it's been very clear there's been a rotation out of the banks, and you've even seen the likes of CSL break through sort of very short-term resistance as well, and then started down on the day today, and price action was quite good. It's ended up finishing up today. So a little bit of heat coming out, but yeah, I think people would be battered and bruised calling CBA down. I mean, the easiest solution is do what I do and just don't watch it until it becomes value. So there's other opportunities out there, and you can. But there is a bit of a levelling in terms of that materials and resources sector was very, very cheap. And there's sections of our healthcare sector which were very cheap as well. That's starting to balance themselves out a little bit now, and we're seeing a bit more of an even-keeled market rather than it just be driven by the big four, which means the rally's probably going to be more sustainable. You've got US copper at record highs. We even had a rally in London copper as well. Silver's at highest levels since 2011. Gold was within 0.5% again of being at record highs. Even in Aussie dollar, pretty close as well. Iron ore's been on an absolute tear for the last 3 or 4 weeks, and you've had the likes of platinum, etc. And then lithium even had a bit of a bounce, which is largely been a dead sector. So it's nice to see some life.
It is nice to see some life. Now, also, I'm just reading a note about Japanese shares hitting a record high, the topics on this tariff relief. This is positive momentum as well, right? The fact that we had that at market open with Japan and the US coming to some sort of a better agreement.
Yeah, so they're saying that deal's done, 15% across the board. So there's now been 4 official deals done. Britain, which was an easy one, they were desperate to do a trade deal with anyone after Brexit, and they were trade deficit anyway with the US, so it wasn't really a big deal. They've done Philippines and Indonesia as well. Not what you'd call like high value targets in terms of trade deals.
But Japan is.
But Japan is. So, but what the pattern we've seen is they've all started at 40 to 50% threats, and they've all ended up being around about 15 to 20% deals. So I think that's just going to feed more in, not necessarily the taco, but this is not going to be necessarily as bad as we think. But we're very silent on China overall, and I think that's for the global economy, and that's the big one. And obviously there's a little bit of back and forth with the EU. I mean, Trump's announced 24 trade deals are done. There's actually only been 4 done. The threats are at 40% plus. They're actually getting done at 20. So we'll just see if that hard deadline next Friday actually is a hard deadline. But Congress has now gone, they've dismissed them a day early. So they've avoided that debt ceiling thing, the Epstein files thing, and they've all gone home for summer holidays. So it'll be pretty quiet, I'd say, for the next week, and the focus will largely be, until payrolls next Friday, will largely be on US earnings.
Yeah, absolutely. Well, speaking of, we've got some big ones tonight.
Yeah, Tesla and Google tonight. Google's rallied really hard leading into it, so I wouldn't be surprised if I would say they beat. The US has a tendency to always beat by that much, and no matter what. But as we saw with Netflix, it rallied very hard into the result, beat, and then ended up dropping about 5%. It was already priced in. Tesla's been battered and bruised, but the earnings results there, they're not. It's more about Elon's ability to sell the future. If the investor call is about Elon's back and he starts selling robo-taxis and talking about robots, etc., and rolling out that Grok AI across all the platforms, I think we'll see Tesla go on a tear. People are worried about him being involved in politics, but the guy runs 6 fairly major companies. Politics is really, it's a bit of a sideline act, to be honest.
Yeah.
I think there'll be, given he's come back, I think his PR people will have him well geared up to have some big announcement, which, as we've seen with the Cybertrucks and things in the past, don't necessarily materialise on his timeline, but people still buy into it. It's a hugely volatile stock. It's had, I think, since Trump was elected, it's doubled in value, halved, doubled, and then come back to where it is towards the bottom of the range now. So we've got a spec buy on that for leading into earnings this evening, because I think he'll be pitching the future prospects of the company, and they won't necessarily be about car volumes or Tesla volumes.
All right, be interesting to see. We'll wait for tomorrow, Mark.
Indeed.
Thank you, as always, Mark Gardner from MPC Markets. Let's get back to our equity market and have a look at the stock of the day, which was, I believe, Paladin Energy. We had our experts, Andrew Wallant from DP Wealth Advisory, Henry Jennings from Marcus Today.
There's a change in management. You're always just cautious, because the new CEOs, the guys and the girls, this is what they do. They change personnel, they rebase expectations. And so you just let that settle for the first 12, 18 months, in my view. So it's a hold. No surprise to see the price under pressure, but could potentially be under a little bit more pressure in the short term as analysts recalibrate their their earnings in light of the guidance, but it's a hold.
I think this one is going to start to look interesting again, because ultimately, if we see the uranium price kick higher, which I think it will in time, where do you go to? You go Boss, you go Deep Yellow, you go Paladin, and this one will have its day again. It is very much sentiment, and all the production issues and all the price realized will be forgotten as the rush to buy some sort of uranium exposure and squeeze those shorts will come back to the fore. So I'll wait a few days, see how it settles, see what the brokers say, but I think this is popping back up on my radar as a buy to give you that exposure to uranium.
All right, the market has closed the session. Let's have a look at some of the leaders that helped us get to these close to all-time highs. Whitehaven Coal looking very solid, up 7%, along with Elders, James Hardie, Mesoblast and Iris. To the downside, We talked about Felix Pharmaceuticals, Mark saying that it's sort of being unfairly punished. Perhaps Australian investors don't understand how these subpoenas work. The SEC just asking for more detail. Paladin, of course, came through with its update, sending its shares down 11%, and a bit of switch out of some other uranium players and lithium as well. Liontown down 4%. In the small end of town, Ostco Healthcare had a solid session, along with Biomi up 12%. The laggards in the small end of town included Astron down more than 10% and Dateline Resources off by 7%. Now tonight we get US June existing home sales and also a lot of earnings. We're talking about those with Mark, including AT&T, Alphabet, the Google parent, Chipotle, Hasbro, IBM, Tesla, GeoVanova. A lot. Will be focusing very closely in on Alphabet and Tesla, of course. And tomorrow we have the S&P Global PMI for July. The RBA Governor Michelle Bullock will be speaking at the Annika Foundation at lunchtime in Sydney. Perhaps any clues as to why the RBA left rates on hold, although we have heard that a fair bit, including the minutes yesterday. Also earnings coming through from Newmont. Some quarterlies, including Fortescue, Karoon, Lynas, Northern Star, Sandfire, and Macquarie holds its AGM. All right, let's recap where the local market is. Up 0.8% there on the CBO 200. And I'll get you a fresh read on where the ASX 200 is. Just coming off some of those earlier highs, but we did touch an intraday high at one point. 87.37 is where we sit, 60 points higher, 0.7%. Yeah, about 0.5% off the all-time high, but still very, very solid session indeed. We'll take it. We'll be back to see how Wall Street reacts to all those earnings tomorrow from 9:45 a.m. Eastern. We'll see you then.